The Bay Area housing market has been in a bit of a slump recently, and it's really hard to make sense of what is happening right now with Bay Area real estate. Regardless of whether you're a home buyer or a home seller, you've probably got some questions, and in this video, we're gonna go behind the scenes and really break down the data to show you exactly what's happening in the Bay Area housing market coming up on this Silicon Valley Snapshot. For those of you who are new to the channel, my name is Gould. I'm a local realtor and hotel investor, and over the last decade, I've helped over 250 families buy or sell real estate here in Silicon Valley and overseen over $250 million worth of real estate transactions. And in that time, I have never seen a market like the one that we're in right now. We are sailing in uncharted waters, and the data is unlike anything that I've seen before. This is unprecedented in a lot of ways, and we're going to dig into that data. But before we get into the data, if you are a home buyer in today's marketplace and you're trying to figure out, is now the right time for me to buy? And if I do buy, what should I expect? Is the market that I'm buying in hot? Is it not right now? Because even though the Bay Area as a whole might be on the decline, there are still some pockets, some neighborhoods, some zip codes that are trending in a positive direction. And as a buyer, you should know what those areas are so that you're not set up for failure. So make sure to text the word data plus the neighborhood or the zip code or the city that you're looking in, and we will get that data sent straight to your inbox. And if you're a home seller and you're trying to figure out, what should I price my property for? If I'm going to enter the market right now as a home seller, what am I going to price this property for? Because right now, pricing strategy matters more than anything else. It matters more than the marketing of the actual home, is understanding what to price your property for. So if you're interested in getting a comprehensive data report to assist you in your pricing decision making, you can text the word data plus your property address to the number down below. All right, so let's just dive straight into the numbers, because this is absolutely bonkers what we're seeing right now. Here in April, you'll notice that we had 1,736 homes active on the market, 1,045 homes pending. Let's just look at a year ago. We had in April of 2024, 1,020 homes active on the market and 1,165 homes pending. So we've gone down about 100 units or so in pending, and we've gone up in inventory by about 700 homes. So we've gone up in inventory 70%, and we've decreased in pending activity by about 10%. That's an 80-point shift. Incredibly significant numbers here in Santa Clara County, and it doesn't get any better than this. Let's move on up to San Mateo County, where we had 703 homes active on the market, 416 homes pending. Let's look back at a year ago. We had 539 homes active on the market and 365 homes pending. So we actually had a little bit of an increase in pending activity in San Mateo County, which is nice. And then when we look at the active inventory, we did see about a 20-ish% increase in active inventory. So it actually didn't get worse in San Mateo County, right? But San Mateo County's been a little softer for the last couple of years. Even last year, as Santa Clara County was actually plowing through a lot of uncertainty and was doing quite well last spring. If you look at the previous slide, you'll see that. San Mateo County last year, active inventory was always outpacing demand or pending activity rather, which, if you look back 5 years ago, back in 2000, let's just say 18, 17, 16, San Mateo County was white hot, and now things have slowed down there significantly. Now, let's head over to the East Bay, because in the East Bay, we have a lot of the same story that we're seeing in Santa Clara County, starting with Alameda County, 1,605 homes active on the market, 743 homes pending. That is borderline neutral buyer's market, really, here in Alameda County, just in terms of pure absorption rate, pending versus active inventory. You look back a year ago, we had roughly the same amount of homes pending, 795, 983 homes active on the market. So we increased inventory levels by about 60 to 65% and decreased pendings by about 5%. So we're at about a 70-point difference here year over year in Alameda, and in Contra Costa, it's even a little bit worse than that. You look at this year, 1,739 homes active on the market and 805 homes pending. Look back a year ago, 1,056 homes active on the market and only 869 homes pending. So again, we decreased a little bit on the pending activity, and then we increased by 70% on the inventory levels year over year. So what does this mean? Well, first thing I can say is that I've never quite seen inventory levels jump this dramatically throughout the entire Bay Area market. Perhaps in one county, it goes up significantly, but it's kind of counterbalanced out by other counties. That is not the case. We are seeing widespread situation here in the Bay Area where inventory levels are up dramatically year over year. And that's the real story, because pendings have more or less stayed the same. Sure, there's a 10% drop year over year in Santa Clara County, but if you look at San Mateo County, look at Alameda, Contra Costa, there's marginal differences in the pending activity. The real story is the increase in inventory levels. Now, if we want to get more specific about this, I actually went a little deeper to figure out what type of inventory are we seeing a surge of here in the Bay Area. And it's a little bit different for every single county. Let's start off with Santa Clara County. So if we pull out just the single family homes in Santa Clara County, you'll notice that we actually have a slightly better situation, right? I wouldn't say a significantly improved situation, but a much better situation for single family homes here in Santa Clara County. 1,028 homes active on the market, 749 homes pending. Look, at a year ago, we had 811 homes pending, so we had a few more homes pending, right? Single family homes, and 655 homes active on the market. So in the single family sector, we're seeing about a 35 to 40 point swing versus that 80 point swing that we are seeing for the market as a whole, which means condominiums and townhomes are really the real culprit here. Yes, we're seeing a surge of single family homes, but we're seeing even a bigger surge in condos and townhomes. And we actually get to see that here in this graph. We had 702 active condos and townhomes in Santa Clara County in April of this year, and we only had about 350 to 360 or so. Hard to tell with the numbers, are so scrunched together. It looks like 362 homes active on the market. So we doubled our condo and townhome inventory over the course of a year. And that is a much more dramatic situation than the one we're seeing in the single family sector. Now, in San Mateo County, we're not seeing as big of a difference here in the single family sector. We had 449 homes active, single family homes active in San Mateo County, and 314 homes pending. You look back a year ago, we had 369 homes active on the market and 270 homes pending. So basically, the pending has stayed the same. Pending levels have stayed the same in the single family sector in San Mateo County. And we've seen about a 20-ish to 25% really increase in inventory levels. So if anything, I would say San Mateo is almost identical, right? So whether you're selling a condo, townhome, or single family, the market conditions are relatively similar in San Mateo County, regardless of property type. Now, in the East Bay, and what I did was I combined Contra Costa and Alameda, since they're fairly similar in terms of their numbers. We see that there was about 2,240 homes, single family homes active, and 1,232 homes pending. You look back a year ago, 1,375 homes active, 1,293 homes. So basically identical pending numbers year over year, right, in the single family sector. Do some math, and about a 60-ish% or so increase in active inventory. So in the East Bay, are single family sellers better off than the whole? Yes, but not by that much. Really, in the East Bay, we're seeing kind of similar numbers that we did, more similar in San Mateo County. Where it really pays to be a single family seller right now is in Santa Clara County, where we're seeing improved market conditions, or better market conditions, I should say, significantly better market conditions for single family sellers as opposed to a condo or a townhome seller. So what does this all mean? Well, first things first, it seems like for the time being, this market is here to stay. This is a trend that has been growing really since January of this year. You look at the trend lines here, things have not improved since January, and we've actually seen things get worse really since January. And this is no longer just a blip on the radar, right? This is now a full-fledged market correction that we are going through in the San Francisco Bay Area. The question that's probably percolating through all of your minds right now is, how long does this last? And the answer is, truthfully, I have no idea. There are several factors that are contributing to this. Number one are the interest rates. So first thing, logically, that would have to happen for us to see some improvement in the market conditions here in the Bay Area is for interest rates to drop. There have been threats of this happening, and there's reports that it's going to happen, or there should be several cuts rather throughout the course of this year, but that remains to be seen. We also have a tremendous amount of economic uncertainty right now. The stock market has taken us for a wild ride this year, and stocks tend to correlate a little bit more with the Silicon Valley real estate market than it does in other parts of the country, because so much of individuals' net worths here in the San Francisco Bay Area are tied to stocks. My clients' down payments normally come from stocks, or at least a portion of it does. And so it's natural to assume that until we regain some certainty economically, we're probably not going to be able to get back to where we were pre early 2022. And let's face it, those two things that we just discussed actually have more to do with demand than supply. And the real issue here is the supply. And really, this has been an issue for the last couple of years. We are now just paying for it because really the last couple of years, we haven't seen inventory on the market. Inventory has been so sparse, so scarce, and it's been so pent up for so long that people are just saying, screw it, we're going to move anyways. I've said this before on this channel and I'll say it again, people will only put their life on pause for so long. And starting in 2022, when the rates jumped up, a lot of people put their decision making on pause thinking that maybe someday in the near future, they'd get some relief, but that relief has not come. But here we are 36 months later and people have just decided, you know what, honey, it's done. We're not going to take any more time. We're not going to waste any more time sitting here in this house that's either too small for us or too big for us. We're going to move forward with our plans, regardless of whether or not it hurts us economically. Now, for home buyers, sellers are feeling the pain. And there are some sellers who are very scared about what's happening right now, and they are quite negotiable on their prices. There are also other sellers who are still living in delusion and are sticking firm to their prices. Those sellers will be the ones that you see on the screen that don't sell. So get out there, look at homes, and focus on the sellers who want to sell, because chances are you're going to get a very good deal right now. And as long as you're planning on staying in that property for more than 3 to 5 years, you're going to build equity. Yes, prices might fall a little bit further, but you don't really know when you're at the bottom until it's too late. You only see the bottom once you're on your way back up. And right now we're still working towards that. And as a buyer, it's a tremendous opportunity to take advantage of buying a home in a usually very competitive market. And these types of opportunities do not last forever. Now, if you're a home seller and you're watching this video, maybe you're sad or you're angry at me or whatever. Well, first of all, don't shoot the messenger. This is just my take and I'm giving you the data. I'm giving you the facts. Can't really change the data. You really can't change the facts or your interpretation of them because the facts say what the facts say, the data says what it says. As a home seller right now, the people that should be selling are the ones that actually want to, need to, but this is not a market where you're going to maximize price. This is a market where you have to figure out what's the strategy that's going to protect the most amount of my equity possible. We are not in gouge the market mode right now. We are in wealth protection mode right now. How do you protect your wealth? Price the property appropriately, market it correctly, and be patient. Things in this type of market take time. First offer might not always be the best offer. And remember that negotiation strategy in this kind of environment is imperative to protecting your hard-earned equity. Now, if you'd like to have a no BS strategy session with me, where we can really cut through the noise and start to assess whether or not it makes sense for you to buy or sell in this market, and if it does, put together a winning strategy for you, you can text the word consult to the number down below. That's consult to the number down below. I will personally reach out to you to set up a time to Zoom with you and go over your situation in detail to give you my unfiltered, no-nonsense advice. That's it for this video, everyone. This is Danny Gould, and I'm selling Silicon Valley. Catch all of you in the next video.